Hello, friends. This is Maria from the Cryptemic Academy. We are analyzing key market events briefly and to the point. Let's go. Geopolitics is pushing markets into the crypto space. The escalation 60th on 700, the Strait of Hormuz, has increased pressure on traditional oil markets. But at the same time, part of the liquidity has begun to flow into crypto derivatives. This is a signal. Web3 platforms are increasingly competing with classical exchanges in conditions of high volatility. Bitcoin reacts to diplomatic signals. Amid possible dialogue between the US and Iran, the market shows cautious optimism. The reduction of tensions is rekindling interest in risk assets, and the crypto market is becoming one of the first beneficiaries. Institutional staking continues to grow. The partnership between Jito and Coda strengthens the infrastructure for large investors. The market is gradually moving towards a model where staking becomes part of institutional strategies, rather than just a retail tool. Politics and technology intersect. Candidates for key regulatory bodies are increasingly linked to investments in AI and crypto. This shows that new technologies are already integrated into the financial system at the decision-making level. Tether is betting on the mass market. The launch of its own wallet is aimed at simplifying the user experience. The focus is shifting towards accessibility, where crypto becomes closer to familiar financial instruments. Bitcoin is preparing for long-term threats. Developers are discussing the transition to quantum-resistant algorithms, as current cryptography may theoretically be vulnerable in the future. Proposed changes could affect old addresses and even lead to the freezing of funds if they are not updated. This raises an important question: how to maintain the security of the network without disrupting the balance and trust of users. Privacy is reaching a new level. Projects like Mirage offer an alternative approach to private transactions, without mixers and pooling funds from different users. Instead, a model of individual calculations is used, which conceals the connections between the sender and the recipient. This makes such solutions more convenient and potentially more acceptable from the regulator's perspective. The oil market is sending mixed signals. Despite rising prices amid geopolitical tensions, the internal structure of the market is weakening. Interest from participants is declining, activity is falling, and liquidity is shrinking. This may indicate the exhaustion of the current momentum and increases the likelihood of sharp movements in both directions, which also affects investor behavior in crypto. This is where our episode comes to an end. What do you think? Will crypto platforms be able to compete with traditional markets? Will institutional staking become the new standard for investors? And how serious of a threat will quantum technologies pose to the crypto industry? Share your thoughts in the comments. If you want to delve deeper into the crypto market, visit the Cryptemic Academy, like, subscribe, and see you in the next episode.